Okay, we are live on YouTube, so welcome everyone. Today is Friday, the 21st of November, so welcome to another episode of the Crypto Hour. So let's get straight into it because there's a lot to cover today. Obviously, if you have been sitting and checking crypto prices, you would have thinking, what the hell has happened right now? So we had a couple of days that they are not, haven't been pleasant for anybody that has any crypto in their portfolios. But let's try to unpack it and understand these moves and trying to make sense of it. Okay, so I'll share my screen and we'll dive right in. Okay, this is a very short-term chart. Okay, so it's a 5 minute chart, and I just wanted to use it so that you can realize how quickly things have moved. Okay, so Bitcoin was hovering around yesterday around the $90,000 level. And so we were about 92,000 at 1 o'clock yesterday. And then this is what the kind of liquidations look like in crypto. Okay. So we had the release of some economic data, and we'll look at it a little bit more in a second. But this is what we had the release about 1:30 in the afternoon that seemed to indicate that there is less chance of an interest rate cut next month, and that caused a price drop, both in the Nasdaq, but more in crypto, and it went. You can see from about 3 o'clock till about 5 o'clock. In a couple of hours, it went from 90,000 all the way to like about 86, 85. Okay, and then this morning, and this is kind of like this is a proper liquidation. Okay, so in 5 minutes, price went from 85,000 to 82,000. So $3,000 in basically five minutes, which is insane. If you look at it, even look at this in 1 minute chart, 85 to 82,000 in 1, 2, 3 minutes. Okay, so this happens because then there are kind of like long positions, leverage long positions get liquidated, and so liquidation means that somebody is long Bitcoin, they bought Bitcoin, okay, so their Bitcoin gets sold, okay, and so that increases the speed of the movement down. Okay, now we kind of recover between 82 and 84 at the moment, so we're standing at a inflection point, trying to understand if this level is kind of hold and we start grinding back up to kind of where we were yesterday, or if there's going to be another strong impulse. And it's probably going to see it during the US hours. Okay, so around in about 5 hours time roughly. So in terms of, is this normal? Are we in a bear market and everything else? This structure is still intact, but we are getting close to a very important inflection point. So we are now, as you can see, this level above between 97 and 91 is what I was 97, 90, sorry, 93, almost 92.8 is where I was expecting to see a sizable bounce. Oh, nothing other happened. Price went straight through. We are now at the low, at the last big correction that we had in April, between January and April. It goes for pretty much from 80, 86, 86 and a half, all the way down to 75. Okay, so now for the long-term uptrend to remain intact, this level needs to hold. So a closing below this level will then open up, a big drop up to the 50,000 or thereabouts. Okay, so I would say be ready because anything can happen from now on. Long term, not much has changed, but if we look at 2023, this is when the price of crypto started going up again. We already had two sizable two sizable corrections. So let's go and measure them. First of all, in March 2024, it lasted until August. That was like 33.5%. Second, yeah, so we're doing from the top to the bottom, okay? Then the other one started January of this year until April. That was 32%. And at the moment, we're at 35%. So pretty much like three very, very similar moves, 33, 30, 32, 35. So kind of like this kind of moves have a tendency to repeat during a cycle. So kind of like corrections, as we can see, of 30% have been normal during this cycle. If we see during the last cycle, we had this big correction that was 55%. Okay. The first move, the second move, this one was 52%. So you see us even during this cycle are how similar the moves were. Now, this cycle, as you can see, we gone to a kind of smaller corrections because there's a lot more money obviously being invested in crypto and kind of Bitcoin right now. So we've gone from the kind of 55% to around 30, 35. And this is what's happened until now, but all this will carry on until it doesn't. Okay, so if this breaks, could be the beginning of the next phase, the next phase of kind of like running out of kind of the bear market. I personally don't believe that, and I will explain why in a second. Because of what is around the corner. Okay, so this is kind of what sparked all the move yesterday, and the market was already nervous. Okay, so this week we had, in terms on the economic calendar, it wasn't a particular heavy week in terms of economic calendar, but we had a lot of you see here, all these on Tuesday, all this unemployment claim. These are kind of like old data that wasn't released because of the US government shutdown. So they didn't release all this data the previous weeks, then they released them all at once. And the same for the non-farm payroll. Okay, that was released yesterday. And usually normally it's on a Friday, but this is an old one, it's not a new one. The one from last month. And kind of this is the number, as you can see here. So the expectation of the market was about 50,000 jobs being added, and the number released was about 119. Okay. Now, this would be kind of, if that number it's a reliable number, will be very good news for the American economy. It means that they're adding a lot more jobs than was expected. And so, as a result, from the financial perspective, is that there is less expectation of an interest rate cut because the economy is doing all right. Thank you very much. Okay, but when you start actually digging in, and this is like a research from Scotiabank, okay, so it's not mine or something that I'm making up. And so the title of this article is "Why Non-Farm Payrolls Was a Near Disaster." So this is again the number that was recently I just showed you. Okay, so you can see this is what the actual was, 119,000. The consensus was 51,000, what was expected. Okay, and the number that Scotia expected was -20. Now, if you see here, comparing kind of the payroll in general for all the years, for all the last 20 years or so, still this number in 2025, which is the red number, does fare pretty badly on average on the number of jobs that have been added to the economy. But the other part of it is that this number, the number that was reported after applying a seasonal adjustment that has never been seen before. So this is the red line here. This is the seasonal adjustment. This is the highest. It's never been used with no explanation whatsoever. So it's basically pretty much like making it up. Now, so if you see like the factors, where are these jobs come from? they can on a very few sectors have actually added any significant number of jobs. So basically just like a hospitality and education and health service. But the other thing to understand is that, the expectation is that, um, sorry, there have been minor exception is that government added 22,000 jobs at the state and local levels, and federal government shed only 3,000 jobs. This is where all the Doge packages were expiring. So where people expected to see a big cut in government-related jobs, during this month, and nothing like that actually happened. And actually, there was like state and local levels even added a lot more jobs. So, you know, some of the job gain would be a kind of like a perverse reaction to the raids to get people out of the US, illegal immigrants and so on. So a number of jobs in the healthcare sector come with visas and green card sponsorship, which can also have an effect on the numbers. And you can see, so all the other indicators, like for example, US hourly wages are growing kind of like at the lowest rate that there has been over the past couple of years. Total hours worked from people is actually gone negative this month, Q3 in 2025, compared to all the other quarters where people were working longer hours. Now there are less hours billed. So, and also here, when you look at how the data itself is collected. Normally, there's a first preliminary set of data, then there's a second preliminary set of data, and then the final one. For August and September, we just have the preliminary, and we have the second preliminary for August, but nothing for September yet. So this is data that they have reported, but is very likely to be changed significantly over the next few months. What is more significant is looking at this, the continuing jobless claims. As you can see, the trend from 2023, that keeps climbing. So this is, although the financial markets sometimes have a tendency to overreact to this sort of news because of being highly dependent on interest rates. The numbers actually, when you look at the real numbers and not the ones that just are being reported, are highly supportive of an interest rate cut in December. So it's more likely than not, even if now predictions are less than 50% chance of an interest rate cut, but that could definitely happen in the next meeting on the Federal Monetary Committee. Okay, so having said that, there's a little thing that I wanted to read you from a group that I'm part of. That is describing what is coming in of a macroeconomic group that I'm part of, what is coming over the next few months. Okay. And this is really the crux of it and why I've got the stance that I have. Again, I will still have good mood and thinking things will go well. In the first half of the next year, the US will be delivering a primary fiscal impulse equivalent to 2.5% of GDP, while nominal growth runs at 5% and core inflation sits at 3%. This is just, the technical word is nuts, absolutely nuts. So on top of this, a very underappreciated aspect about AI capital expenditure is how many jobs will be created out of that. Probably about 150,000 jobs in US manufacturing will come from building data center and ancillary jobs. And data centers, and ancillary jobs will be another 400 to 500,000 on top of that. So that will increase the NFP pace just from that by about 50,000 a month, and non-farm payrolls. Okay, so given the immigration policy have reduced the supply of labor, it's likely the US unemployment rate will fall when wages increase. Now, the Fed won't hike. Okay, so they won't raise the interest rates. Now, 3.5% or lower interest rate against that backdrop is very, very accommodative. That means it's easing. Okay, so basically 3.5% Fed funds against 6% nominal growth and stronger income growth equals a likely melt up in assets. Melt up means that they're going to go to silly prices. Okay, so again, talking about assets, guys, there's not just one single. I'm not just talking about crypto, talking about stocks and shares, talking about metals. We're talking about different type of ETFs, but timing is key. So data will only be validate this theory, if correct, in the first quarter of next year. Okay, in the meantime, the US fiscal tightening, which is the tightening, is actually part of it is going to finish at the end of this month in 10 days. Okay, the other part is coming from the tariffs and the shutdown. Okay, which is equivalent to about 50 basis points of GDP in 2025, will result in fairly low NFP, which is a national, the payroll numbers that I just showed you, and growth data in the last quarter 2025. So we're still going to have low jobs numbers and low growth for the last quarter 2025 before this tsunami of cash hits the market and it starts pushing everything up. So in the short term, we might still see some short-term pain. Okay, and this is, obviously we're looking at Bitcoin here, but also we're talking about in terms of possible correction on the stock market. So we can see here, this is a weekly chart of the Nasdaq. Okay, Nasdaq futures. So we are now probably, if we're going to close this week below that point, then we will have invalidated the uptrend. So we will then officially we have terminated the uptrend. What comes after remains to be seen. It doesn't mean not necessarily a downtrend follows an uptrend, but we could get sideways move for a while. But so far, this correction has been about 9%. I would say it will be nothing unusual to see a correction like we had in February to March of about 26%. Okay, so if we were to apply that to this moment, obviously because the numbers are bigger, in terms of number will look a lot bigger, 26%. But we could see, remember that with just the Nasdaq made a high up at 26,004, we might see it drop to around the $20,000 mark, 20,000 points, sorry, 20,000 point mark. Okay, so it wouldn't be unusual. And the same for when we look at the S&P 500, same thing. 21% last time, so 21% from here will bring us back from, the high that we just reached a few days before was 6,953. So it could drop all the way down to the mid 5,000, 5,500. And by the way, so all of this, especially in the S&P 500, will still be just a correction. Although it can look painful, because I'm thinking, well, if you bought any shares, during this time, you probably either have to sell them at a loss or you are, holding a position that's in the red. But even losing 21% and going back 1,500 points, which is, basically a little bit less than a quarter. So a big drop wouldn't invalidate this big uptrend that the S&P has been in since October 2022. Okay, and more generally speaking, with a couple of strong corrections really since 2009. Okay, we haven't had any any real, apart from the 2020, this is almost like a panic situation. But apart from that, we have been pretty much on a tear every single year since 2009. So, and also let's have a look at our gold. It's doing the same. Let me just get rid of all these things that is confusing. Okay. So similar thing with gold. Gold is holding a little bit better, obviously, because it's a reserve asset. So it has dropped about 11% at the moment. It's sitting at about 7%, 7.5% down from the top. Everybody is expecting anyway in the short term a correction anyway. Since it's gone up so much in 2025, a correction was expected, widely expected by everyone after growing 68% in a year. Okay, so if it dropped 10%, even if it goes back, I wouldn't be surprised. I wouldn't be surprised to see gold back in this range. Okay, but it still would be nothing compared to the 2025 move. So would only mean a correction about 20% from the high. Okay, which again nothing when it's grown 68%. So you see what we've been discussing the past few weeks, always been telling you kind of valuations are very high. Okay, valuations are very high for especially for stocks and shares. So a correction is needed in a way to keep the valuations coming back, like the PE ratio, back to normal levels, because at the moment we are at really overpriced levels there. That whenever we reach them in the past, we always had strong corrections. But in particular, going back to crypto, going back to Bitcoin, Bitcoin is very dependent on liquidity. It's almost like works as a canary in the coal mine. So it's the first asset that will react to liquidity issues, but also is one of the first assets that will react in a positive way once there is a hint of liquidity starting to grow again. Okay, so to cut a long story short, we're still not out of the we're not out of the water yet, but definitely I haven't changed my outlook for 2026 at all. I'm still expecting Bitcoin to make a new high. Okay, for 2026. The only point is difficult to see is that how deep this correction will be. Nobody can say exactly where it will turn around. Before we had this really deep correction, I would have expected it to turn around here, somewhere around here, but it's still, there's still a big, a long way to go before we test the bottom of this. So we could very well go and touch, the around 80,000. I wouldn't be surprised, or even below that, and still keep this intact. Even to the bottom of this, we'll still be at 40%, which is, again, it's something that has happened before several times during bull markets. So it doesn't mean that if there's a big correction, even if we move below 75,000, that everything is dead and we're going back to 10,000. Okay, that kind of reality, I don't believe it's possible anymore. I mean, everything is possible, but I don't think it's likely because there has been so much business moving into crypto and investing in all sorts of infrastructure that it wouldn't make sense for this all to kind of lose interest. And just the latest news that we were talking about last week, they were talking about companies like PayPal and Block and Square. They are changing all their terminals to accept crypto payments at the point of sale. So you can go into the shops and buy your suit or your whatever, your handbag or whatever you buy with crypto directly, instead of having to exchange it for cash first. And that technology is just coming to the fore. There's a lot of assets are being transferred onto the blockchain, for ease of transferring and for ease of, trading 24 hours a day. So there's a lot of these movements, a lot of these infrastructure moves that are becoming, that is happening in the background. So I know that this feels very manufactured as well to me, especially when we go into smaller time frames. Okay. So let's have a look what happens at weekends. When was the weekend? Today is 21st, so 23rd, Monday, so the 16th. Okay. But this is what happens at the weekend. They say, everybody's saying now, JP Morgan say, oh yes, all this sell-off is people selling their crypto, is what's it called, individual holders selling their crypto. Well, why then is that during when the market is closed, between Friday night and Sunday night, there was no sell-off. Okay, this is where the market closed, and this is pretty much at the end of the week. It was at the same point. Went up a little bit, down a little bit, but it was pretty much at the same point. Where is all this big sell-off from individual holders of Bitcoin? I don't see it. And pretty much if you go and look at every single weekend, very rarely you see the price moving significantly at the weekend. So these moves only happen during market opening, when the markets are open. So this is kind of like I see as like a big institutional movements of coins rather than retail. And I might be wrong, but this is the evidence, database evidence that I can see from here. Now, that's the other thing that I wanted to learn. This is the fear and greed index. Okay. And you can have a look at it on a weekly level, a monthly level, yearly level. So on the last week, we have been sitting in extreme fear all week. Okay. The last month, we have 26 days out of 30 have been either in fear or extreme fear. Okay. But when you look at it over the last year, the things are more balanced. Okay. So we've just been at the extreme. We had extreme fear for 16 days, extreme greed for 12 days. Any other time would be in sort of in the middle, either neutral or in greed or in fear. Okay, but just remind you that as investors, what are the opportunities? The opportunities are to buy when people are fearful and sell when people are greedy. Okay, so at the moment, being generally with such low readings of the fear and greed index, normally we are approaching that kind of a capitulation and the turning around. So normally these really low levels, and this week has gone even to below 10, they tend to mark local bottoms and before before a relief rally, before price eventually turns around. Nothing is guaranteed, but this is kind of like kind of expectation. Other things here that we can have a look at: exchanges, market, Bitcoin ETFs. So all this, by the way, all this have happened is that on the background of ETFs being launched for Solana, for XRP, for HBAR, for different coins, and those ETFs have actually received pretty good inflows. So there is still demand for these sort of products. But obviously, when we start looking at the Bitcoin, the Ethereum ETFs that have been around for a while, there have been quite a lot of outflows in the past few days. So you see here this week, we've had, before this week, from the end of last week, 1, 2, 3, 4, 5 days of continuing outflows, a little inflows on Wednesday to Thursday, and then again a big outflow yesterday. Okay, this is pretty much following the the news release. So it's a few billion have left have left in total, kind of the amount invested. There's still about 60 billion in there. Okay, but it's we've seen quite a drop in flows from the ETFs this week and the week before. That's the Ethereum there for you. Ethereum ETFs, even worse than Bitcoin. They had no positive day at all. Okay, so from the 7th of November has been like a steady outflow of funds in ETFs. And we can even see let's have a look at the Solana ones together. So you can see the Solana ETF, even in the market crash that we've had, it's still attracting new funds. Okay, so there is demand there. It's the kind of the movement, not necessarily the movement in prices. It's the end of the world, but it is definitely from the point of if as everybody says, there is a lot more institutional money in crypto, it means also that the price patterns have changed because institutions really don't. I'm not like married to Bitcoin. They use it as an investment. So as they do every investment, so they invest in something, okay, and then they rebalance continuously their portfolio. So if let's say Bitcoin goes up a lot since they held it, then they will sell some of that gain to then invest in the other sector, so their account is always balanced. At the same time, once the level of Bitcoin that they bought, let's say that they wanted to have, I don't know, 1% of Bitcoin in their overall portfolio. Once that level drops because the price of Bitcoin goes down, they are likely then to buy again to rebalance their books, okay, to rebalance their assets under management. So the pattern has changed slightly. There are still very positive news coming out. Now, that's the first one comes from Coinbase. Takes a big step towards becoming an on-chain bank in the US. Okay, so this week we had the Ethereum collateral loans were live this week for most US customers apart from New York, allowing up to 1 million of USDC to be borrowed without selling your Ethereum holdings. We're using your Ethereum as collateral. So this is a service that runs on Base and is powered by Morpho. We'll have a look at Morpho in a second to see what kind of returns you can get on USDC. Okay, more important is what this launch represents. So it's another step towards turning crypto assets into usable capital. So you can get a loan directly from Coinbase with, backed by your crypto assets rather than having to sell them to realize money to spend. Okay, so Coinbase on-chain activity already had a certain size. Okay, so they already had more than 1.25 billion in loan origination, and they had collected 1.37 billion in collateral. Okay, around and had about 3,500 active borrowers. So if this product didn't start the Coinbase lending, but it was just used to scale up something that was already working. So obviously after Coinbase integrated Morpho onto their app, they started beginning to offer yields of up to 10.8% on USDC. Obviously, can you imagine, how attractive that can be, for people that normally have their money basically, in the bank or with a certificate of deposit that might give them, I don't know, around 4.5%. It's definitely very, 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 very attractive. Okay. Other bits of news, and I don't have too many because I want to show you some actual activity on chain. Okay, another one, Deutsche Bank has actually put I don't know if any of you have heard of Bullish. Bullish is an exchange. It's an exchange that in the US. Sorry, it's an exchange in the US, and Deutsche Bank that is now quoted in the New York Stock Exchange, and Deutsche Bank have actually started recommending it to its customers because it's dropped. It was launched at around $90 per share. Now it's down to about $51. And I said at this level, it's a very good purchase. So for those of you as well in Europe, this is available directly in, and it's like a recommendation directly to Deutsche Bank to its customers. So it's showing you that there is institutions don't use emotions. They just look at numbers. Okay, so they are selling what the numbers now look good. Okay, they don't go for the hype of launches, but I think at this point, even if they have, missed the kind of like earnings, the revenue is still very, very good. Say Q3 revenue beats estimates, but profit missed slightly. Okay, so the shares dropped another about 4% after earnings, but they're now trading at $37 below it's the price of the IPO. What else? Okay. Okay, now the other thing I wanted to show you is let's have a look at Morpho. So this is kind of the Coinbase. This is not a Coinbase app, it's the app that's been integrated into Coinbase. Okay, so as you can see here, you can choose. So the Morpho connects to different blockchains. So you can connect to the Ethereum blockchain, Base, Polygon, Unichain, Katana, Arbitrum, Hyper, and Optimum. Okay, and so different blockchains obviously they'll have different products. If you look at the kind of the one that's connected directly to the Base blockchain, which is a Coinbase, you can here on the right hand side where it says the APY, we can order everything by the highest APY and then go down. So as you can see, there's first of all you want to pay attention to how much money is deposited in each one of these opportunities. Okay, so don't get too taken in by the percentages. But the other thing that's interesting here, I think these are at the moment APYs if you deposit USDC in these different vaults. And here where it says exposure will tell you what would you be exposed, if you invest in those things. So tells you exactly a USDA, wrapped staked Ethereum, wrapped Ethereum. I don't know what this is actually. Stake EUR, so stake euro. I don't know. We can check what is. Let's have a look. Yield bearing euro stablecoin. Okay, so this is what it is. And so you can see here different vaults. You have to be careful of see exactly what the money is invested in, because this is where the vulnerability are. If any of these protocols was to suffer a problem, then obviously it will be reflected as well on the amount of the capital that you will get back. But this is one example. You can connect to, I don't know, Polygon, for example, and do the same thing here. So Polygon, they got a couple of these steakhouse high yield USDCs. So here, for example, the first one, the one that pays more 15.84%, invested in Matic X, wrapped Pol, and wrapped BTC and wrapped Ethereum, etc., etc. So you can then have a look at this. If you're after yield, have a look at where your exposure would be, and to see if so this is available directly with the recommendation of Coinbase, available directly from the Coinbase wallet. And as you can see, there are different blockchains that you can connect to. So if you connect to Hyper, for example, but you can see if you have 15.7%, Unichain, about 10%, Katana, about 8.5%. So it can be a possible way to, and this is not by, it's just one of the these vaults, these finance companies that can give you access to this sort of vaults. So, a lot more people now are turning to this as opposed to keeping money on in their account with a bank. So it is a direct competition for the banking sector. Before we go to take some question, you can see Bitcoin keeps dropping. Now at 82.5, so it doesn't seem to be seems that the bears at the moment are in control. Okay, so let's see what happens. Let's see what happens by the end of today, and see if this will see a slowing down at any time. But at the moment, it's not. I will wait to see if you were sitting in cash that you wanted to invest in this. I would like to see a sign, even on the short term, that there is some sort of movement up in price. So at the moment, at the very least, I would like to see price above this point, about 86.5, before being convinced that there is some buying volume, buying pressure without, behind it, before thinking of putting more money into this. Okay, so let's stop sharing. And let's see. Anybody has any questions?
Question I have is a little bit about some of the data that's coming out from the U.S. I mean, I hate to say this, but how reliable do you think it is with all the shenanigans that have been going on?
Sorry, Kim, say again. It was very, very low. Couldn't hear properly.
Oh, I said about the unemployment and a lot of the data that's coming or from the states. I guess some of it I'm just a little suspect given all the shenanigans that are going on. So I mean, there's do you take I mean the stock market's doing one thing, but some of the stuff that they've shut down, don't have people working. What's happening? So how do you know reliability of the data? I would be highly
Exactly
suspect.
that. No, exactly that. And this is the problem. This is because investors in general don't like uncertainty because they need data to make decisions. And so at the moment, there is, apart from anything else, there is that worry that they can't use the data to make proper decisions. So what do you do in those cases? You sit on the sidelines, take your money out and wait to have some clear sign before you re-engage again, And so this is, I think, I think there is a lot of that going on as well in the background at least from the type of investors that don't need to be invested all the time. Obviously, pension funds can't do that. They can't sell their shares for cash, but hedge funds can. Um, Other investment structures can. And so I think it's this is what we're seeing right now. And there has been talk of an AI bubble as well. But
Uh,
over the long term, we can see that money is accumulating, kind of like Google, Microsoft, Nvidia. They're all like borrowing money because at the moment they're very low bond rates, so they can borrow at very, very low historical costs to invest in AI data centers, basically, and energy to support those data centers. So there's a lot of money that's going into the sector. But
okay.
at the moment there is this narrative, there's a worry of a bubble in AI stocks, even with Nvidia that just reported astonishing profit numbers this week. It still hasn't been enough to convince the market, that is still healthy,
Yeah.
you
Okay.
know.
I guess
So
the question, if they're doing all this stuff to develop data centers, my question is what are we looking at? I hate to say this, but electricity futures, or how much are those going up and down because they're going to try and, you know, just like some of the airlines, when they see fluctuations, they want to lock in long-term contracts to get the lowest possible to,
Yeah, I mean, for this,
price.
obviously, they're still raising the money, so they haven't really started building anything. So
Oh, okay.
it's a few years down the line. But the thing is that a lot of so it's already happened for the Bitcoin miners, and it will happen for the data center owners. So as much as possible, they will try to build their own power source as well. Because if there are some of these services are just like too expensive to run them with purchasing energy from somewhere else. So they will build their own possibly clean energy sources. So kind of like solar farms and wind farms
Whatever they can
that
do. Yeah.
yeah that power then the produce the energy that they need. Um,
Okay. Yeah.
yeah.
Yeah. So I
So
just like watch this space for the U.S. because it's turned into like a three-ring circus, really. You just it is. I mean, just everything that's going on is just like, is this actually real? I mean, it's like reality TV gone mad. But anyway,
well, it is. It's almost like I mean, what Trump is doing. It's almost like a leverage bet. It's almost like a leverage bet because it's saying, even if it's saying I am going to lower the interest rates, even if there is no reason to do that. He still wants to do it because this is what he's going to say, and he's put his reputation on it. So it is going to happen. And if it happens when there is in a recession, you just inflate everything. You create a massive bubble.
oh yeah,
So it's
yeah.
just
Well,
not.
everything he's done is not. Everything he says it's been 180 degrees. That's not real. So you just take what he says with a grain of salt. But it's just
Yeah, yeah, but
horrible.
generally speaking, I think we're seeing this across the world, is that no government knows what to do. So what they are doing, they are just pushing the can down the road when they are not responsible anymore. Like, well, I've only got a couple of years left to be gone. Probably won't get re-elected. Make sure that, any problem is pushed to the next government. Not me. I'm not going to be held responsible. They are. And but I think at the moment they don't have the solution to the current situation. And we
I don't
might
think
we
I don't
might
think
kind of
there's a
like
plan at all.
the yeah the playbook is that the next thing that probably will happen is at some stage, so depending on how far away they push it down the road, is like hyperinflation. Because if they start again, just printing an obscene amount of money, and with the debt, American debt especially going up every year, that looks more and more likely. They need to finance that somehow. And so they generate all this debt and can cause prices of all assets to go up. That's the reality. Eric, you had a question?
Yes, what will happen if they are not allowed to keep the tariffs in place?
Yeah, so it's complicated because so if the Supreme Court rules that the tariffs are illegal, then there will be a legal claim for all the businesses that pay tariffs to get a refund. And we're talking around 250 billion dollars, because there's a lot of money. But then it wouldn't follow straight away, because then the tariffs are not there anymore, because the president has got the power to have some temporary measures. So he could even if those tariffs that were introduced months ago are not valid, he could introduce new tariffs that go like a limited, I think it's 90 days validity. So it could really literally carry on rolling off those temporary tariffs. So it's a bit more complicated than that. But yes, there would be a claim for businesses that have paid tariffs to get a refund. And there is at the moment, so one of the things that's going on in hedge funds are buying those rights because they are expecting those cases to be successful. So they're paying about 20%, 20 to 30% of the face value of the claim to buy those rights from businesses. And businesses think, well, great, because at least I can get something back. It's free cash that I wasn't expecting to have. And if then the Supreme Court rules against the tariffs and they can sue the government, they could get 100% of their money back, or at least a good chunk. So So there's all these funny games are going on behind the scenes.
Hmm. Mm-mm-mm.
But anybody else? We've got a few minutes left, and then I'm gonna have to go. No, nobody has any questions? Okay, guys, if you don't, I'll just say, I don't mind finishing a few minutes early. The one thing, the one thing I would recommend you all to do, just if you want to carry on increasing your knowledge of crypto, is to go and attend Jonathan's session. Jonathan's, as for those of you that most of you know him already, but if you don't, Jonathan is a Cardano stake pool operator. Okay, so there you are. And he runs a Cardano-based session pretty much after the end of this one. So if you don't mind, Jonathan, dropping in your link as usual, you can use that link then to for his session. And he goes in a lot more detail than I do and talk about like from a thousand mile view of the crypto market. Jonathan is right into it instead. So like looking at the details, the nitty-gritty details. And so it's very, very useful if you guys have if it's not too late for you guys in Australia and New Zealand. It would be very, very nice to go on to one of these sessions. So there's the link there in the chat box. Jonathan, now the scavenger mine is now finished. Yeah.
Yeah, the scavenger mine process is over, so tokens will be claimable in the next couple of days. December the 8th is when the actual delivery of the tokens is, and then instantly you're going to have them available on exchanges and trading platforms, DeFi platforms. So it's looking like a very good launch.
Question. So we're talking about, for those of you that haven't heard this before, this is the midnight chain, which is launching. It's launching, is doing the biggest airdrop in history. So you're gonna start trading on the 8th of December. But it'd be interesting to see what kind of like a value is given by the market to this chain. I know it's not the best time in the world to start pricing this in, but I mean, we all expect great things from it, but we're gonna see. Market will tell us how it is valued on day one, and then the activity on the chain, how much it is used, will then determine its long-term value. But the 8th of December will be the date. Oh yeah, the question I had for you, I think, will the release of the tokens, is it like staggered over time?
So anybody who's earned tokens through holding other tokens beforehand, and like through the Glacier drop and the scavenger mine, they'll get them in 4 tranches. So it's like a vested release of the tokens. The first one will be on December 8th, and then I think it's every quarter there'll be another tranche delivered. So in a year's time they'll all be out. But yeah, to keep it from everyone dumping their tokens onto the markets as soon as they've got them, they're delaying it a bit. I was at the Midnight Summit the start of the week, and I haven't been to a crypto event where there was so much media present related, who normally won't go near Cardano or anything like that. It was very, very across the board. Everyone was like, yeah, this is a chain for us. So Ethereum guys are there, Solana guys, Zcash, even an alternative privacy chain, and CoinDesk were managing a lot of the media booths. So it's looking like a really good launch, I think. Again, like you said, the markets are where they are, but over the next year, I think it'll do really well. And the technology is very good to build on as well. So I've already launched a smart contract on Midnight now, which is good fun.
Fantastic. So everybody, if you want to know the latest on the Midnight chain as well, join Jonathan. And for now, I will wish you a great weekend. Just quick reminder that I'm not in next Friday. Okay, I'm away, so I won't be either session won't be run on Friday, so I'll be back in 2 weeks' time. Okay, so Have a fantastic weekend, everyone, and I will see you again in a couple of weeks. Okay.
You again. Bye bye.
Bye, everyone. Bye bye.